You don't need thousands of dollars to start investing. You need clarity. And today, I'll show you how to begin with just $100. You fixed your budget. You saved your first $1,000. Now your money is sitting there, safe, stable, but not growing. And this is where fear usually shows up. Investing feels complicated. Charts, headlines, market crashes, people shouting about stocks online. It feels like a world reserved for experts. But here's the truth. Investing is not about being a genius. It's about being systematic. And today, we're stripping it down to the simplest possible version. No jargon, no hype, just clarity. When you invest, you're not gambling. You're buying ownership. Ownership in companies. Ownership in growth. Ownership in productivity. Imagine planting a seed. Saving money is putting seeds in your pocket. Investing is putting them in the soil. One keeps them safe. The other lets them grow. Most beginners think risk means losing everything. But real risk is more subtle. The real risk is inflation quietly shrinking your money over time. If your money sits still for 10 years, its purchasing power slowly erodes. That's invisible risk. Investing is how you fight that. Now yes, prices move up and down. That's volatility. But volatility is not the same as permanent loss. The key is long-term thinking. Investing is not a 3-month game. It's a 10-year game. Beginners make one big mistake. They try to learn everything before starting. You don't need to master the stock market. You need one simple entry point. For most beginners, that's broad market index funds or ETFs. Why? Because instead of betting on one company, you're buying a piece of hundreds. It's diversification in one move. Less stress, less guesswork, more stability. Let's remove the biggest excuse. I don't have enough money to invest. You don't need $10,000. You don't need $5,000. You need consistency. If you invest $100 today, that's not about the amount. It's about starting. Because once you start, your brain changes. You stop seeing yourself as someone trying to build wealth. You become someone building wealth. And if you're serious about making that shift, subscribe. Because we're building this journey step by step, from saving to investing to scaling. Once you choose your entry point, automate it. Monthly, bi-weekly, whatever works. Automation removes emotion. And emotion is the biggest enemy in investing. Markets will go down. Headlines will scream. People will panic. But long-term investors zoom out. Think of investing like planting trees. You don't dig them up every week to check if they're growing. You water them. You wait. Time does the heavy lifting. Beginners obsess over the perfect moment. Should I wait for a dip? Is the market too high? What if it crashes? The truth? Nobody consistently times the market. But people who stay invested long-term historically outperform those who jump in and out. Time in the market beats timing the market. Your edge isn't intelligence. It's patience. The psychological breakthrough the first, but discomfort is growth. Remember when saving $1,000 felt hard? Now it feels normal. Investing works the same way. At first it's scary. Then it's standard. Then it's strategy. And eventually, it's power. This is where everything connects. Budgeting gave you structure. Saving gave you stability. Investing gives you leverage. Leverage means your money works even when you don't. You stop trading time for every dollar. You start building assets. And assets build freedom. That's the shift from worker to owner. But now comes the natural question. Okay, but what exactly should I invest in? Stocks? ETFs? Individual companies? Index funds? How do you choose? That's exactly what we're breaking down in the next video. Because while investing with $100 is simple, choosing the right vehicle matters. In the next episode, we'll compare stocks versus ETFs, and I'll show you what most beginners should actually choose and why. You've built the foundation. You've taken the first step. Now we refine the strategy. Because the phoenix doesn't just rise once. It keeps rising. I'll see you in the next one.